when you look at lending, the secondary market is so important where those loans go. So it'll give more confidence to the underlying collateral that's going into a mortgage bond, which will make it easier for rating agencies, which can also use that technology to do quality control checks before they put the stuff in bonds and ultimately package it up for investors.
Yeah.
Yeah, it's an exciting time, especially in the private lending space for that, because we are outside of some of the banking guidelines where if you're a depository institution, there's just different guidelines and rules. You're dealing with consumers, whereas all of our loans go under the business purpose lending classification. So we lend to LLCs, corporations. It's got to be a business entity. So it's just
I see. Okay.
a little bit there. Yeah.
Welcome back to the Pete Podcast, where we discuss the latest in REI tech, trends, and inspo. My name's MJ. I'm going to be your host as usual, and I'm really pumped to welcome Brandon Goldstein to our show today. He is with Renovo Financial, so if you're looking to finance your next deal with the power and strength of a nationwide lender that has a bit of a different and unique approach, a much more localized approach that places an emphasis on relationships, then you need to pay attention and tune in. So Brandon, thank you for being here. How are you?
I'm great. Thank you for having me. It was wonderful meeting you in person last week and looking forward to chatting a little bit here.
Yeah, 100%. It's had I known that you would have been between when we met going through a full Indian wedding as well for one of your best friends, I would have given you some more time to catch up on sleep, I think. Because we tend to pack a lot in, but I'm glad you're here. So tell us, I know you're with Renovo now, and tell us, I guess, like just at the top, really, what it is you guys do in the lending space, who you're lending to, what kind of deals, kind of what sets you apart, I guess, from a space where there are so many others, right, that investors can kind of choose from.
Yeah, absolutely. So Renovo Financial is a direct lender. We are nationwide and we do a number of different things. So I think just one of the things that may be a bit different is just the breadth of products. And we tend to take an approach of crawl, walk, run. So we really want to have the expertise in-house to understand the different verticals within residential real estate and how we lend within those. Most of what we do is single family fix and flip type of loans. So that's kind of in the bridge loan category, folks that are around the country doing flips for houses. And then we also have the 30-year rental product, the DSCR loans. Outside of that, we move into what we call our Resi CRE, which stands for Commercial Real Estate Group. So that's larger multifamily stuff, maybe mixed use developments, things of that nature that fall outside of that 1 to 4 unit piece of lending. And that is one of the differentiators in terms of just the product set. But the approach and the way Renovo was built is also, an interesting way to build a business that has worked for us really well. The company is about 15 years old. And until 2019, we were local to Chicago. So we cut our teeth in a, difficult competitive market and then realized that the foundation was there to go ahead and scale this out and start opening up the different markets. We realized that being local in Chicago went a long way to set ourselves apart from some of the national lenders out there. So you can build a good business in a number of ways. We see all kinds of lenders having success. For us, what we found, if we want to get the best lenders and the best sponsors, the investors out there that we're lending to, being able to have a very high touch, hands-on approach worked well in Chicago and is something we could replicate throughout the country. So that national strategy started in 2019, and now we're in about 35 states, have over 40 loan officers, and those lenders are in their markets. They understand the deals. They understand the different jurisdictions where the deals take place. So they're able to sort of help these very high caliber investors around the country, maybe see around some corners, be a sounding board, and provide additional resources. So instead of having a centralized structure where we have lenders that are doing loans all over the country, our lenders really go deep within those markets. So they create that circle of success where they know attorneys, realtors, contractors, builders, other investors, and can really give a different feel to the folks we work with.
Hmm. I think that's wonderful. I mean, so you guys built yourselves up in Chicago for quite some time, and I guess what was the as far as what was kind of the motivation to stay really local there? Is the founder from Chicago? And yeah, why that market? I guess.
Yeah, our founders are from here, Kevin Werner
Hmm.
and Daniel Rosen. So
Okay.
they started the company in 2011 and
Hmm.
saw a growth trajectory taking place, and then realized that there was something there and there was some secret sauce just with the culture and the foundation that they had built. So
Yeah.
realized that it would work to go and try to replicate that. And
Hmm.
currently we're the number two private lender in the country. So
Huge.
yeah,
Congratulations. Yeah,
close to probably
that's a big
$4
deal.
billion this year.
Hmm. That is a huge deal. I mean, and for those you had described some of the products that you do, single family, fix and flip, more the bridge side, bridge loans. I think you said Resi CRE more on the commercial side. And then for those who don't know, what is a DSCR? 30-year. Tell us a little bit about that. It's a term
Sure.
that's thrown around a lot for any listeners we have, break it down for us.
Yeah, so DSCR stands for debt service coverage ratio. So essentially, in asset-based lending, what you're looking at is you're taking the net operating income, the rent, and then you're
Mhm.
subtracting some of the expenses, and then you get a ratio of how well the rent is going to cover the debt and some of the other expenses. So that's a good way when you're really looking at the asset heavily. Now, we also underwrite the sponsor, right? We want to understand
Mhm.
experience, liquidity, things like that just make for a strong business operator. But
Sure.
the SCR is a sort of a benchmark for making it a viable loan on a rental. And then that is something that's also looked at in the secondary market by those loan purchasers that are buying the loans, that are going to ultimately securitize those. So they know that they're well collateralized and that the rents coming in will be able to cover the debt service.
Okay. Thank you. Thank you for breaking that down. And it's interesting. We met, at this event in San Diego, and it's it's one thing for, a business to say, "Hey, this is what we do." But I can't, one thing that really stood out to me was the number of other people in the same space as you, right? Other lenders saying, "Hey, you guys have truly built something special." We hear nothing but good things coming from Renovo customers and clients. Uh, and I think it's really commendable, so in terms of what you're seeing, like tell us a little bit maybe about some of the other markets that you're seeing this localized approach. You said you guys are in 35 states, right? That you're seeing this approach really lending itself well to making these loans and helping people finance properties and their investments.
Yeah, well, that's great to hear that you're hearing positive
Yeah.
even from competition out there. We like to
Hmm.
be nice and have sort of a mentality of abundance for scarcity. So we're not the organization, right? We want to make sure we actually do something and serve a need for those that we work with versus just being a capital provider. At the end of the day, the capital piece is a commodity. So
Hmm.
want to differentiate yourself, you really have to be strong on customer service and some of the other things. So
Yeah.
that all lends itself to kind of the reputation that we've built over the years with being hands-on, being respectful. And, this company is being built for stability, consistency, and longevity. So we're not like a, you know, VC backed startup that is looking for an exit and just trying
Yeah, exactly.
to
Exactly. Yeah.
gimmicky loan. loan products just to gain market share and then is looking for that exit.
Mhm.
We're all looking for a place that we can call home for a long time. And I think everybody has that mentality. So the culture within Renovo is that of abundance and, how can we really add value to the folks we work with versus, hey, what's your rate? Oh, well, you didn't beat the
Mhm.
rate by 50 basis points.
Versus how can we extract as much as possible? Yeah,
Yeah, and
exactly.
that, that works for people and there's a lot of good deals out there, but you'll also find that some of the new entrants, because there is so much capital in the space, are
Mhm.
creating these things where they're operating at break even or maybe even a loss to break into markets and gain that market share. And
Sure.
we're competitive and always trying to, stay in line with what the market expects. At
Mhm.
the same time, staying true to who we are. And I think people appreciate that. So once you have that experience where you see, okay, everybody says they have great customer service, right? But
Yeah.
you actually live and breathe it, right? One
Yeah.
thing we do internally is we use a net promoter score. So that's
Okay.
how likely is a client to refer you to somebody else. If
Okay.
and that is something that goes out during every loan. So it goes out a couple
Mhm.
times throughout the loan process with the borrowers, and that feedback goes to everybody in the company. So every Renovo
Mhm.
employee sees that. If it's below an 8, they're going to get a phone call and say, hey, what went
Mm.
sideways on this deal? So it's not just something we say and send out a survey and nobody looks at it. It's part of
Yeah.
it gets circulated every day. Everybody gets to see it, and then it gives us an opportunity to either coach, learn from it, make the borrower's
Mhm.
experience better, or find out what's working. And a lot of times what you get in those is sort of praise for the unsung heroes within the organization, right? Which are the people that are processing, underwriting, credit teams. Uh,
Mhm.
each of our
Sure.
recruiters has dedicated teams under them. So
Mhm.
that also doesn't go into a customer service queue where a different processor runs through each file. The borrowers get to work with the same local loan officer and then their team under them, production assistant, credit analyst,
That's great.
business relationship manager. So those folks work really hard, right? And they're the lifeblood
Mhm.
lending groups within the local markets. So being able to give that praise publicly within the company goes a long way. So it does a
Yeah.
lot of things, and that's just one piece of kind of how we look at accountability and customer service internally.
Yeah. And how big, I know you mentioned, I think you said around 40 loan officers right now.
Mhm.
Is like how big is the company? Like past those loan officers, are there a few other employees or
Yeah,
over at Renovo?
I want to say we're probably around 300 employees.
Okay.
Yeah,
Yeah.
and
And
then we
and are
also,
folks, Brandon, are they based in, if they're a local, let's say they're, in, Kentucky, in a certain, city in Kentucky, are they physically in those markets, or are they, some people are working from the Chicago branch or other branches,
yeah,
but
so
they're
most
just,
folks are in
they're
our
experts?
headquarters here in Chicago.
Yeah.
But a lot of times those teams, as they grow, they're hiring local folks. So they'll have an
Sure.
actual brick and mortar office with people going into the office every day around the country. So
Yeah.
it's a bit of a mix. And then we also service all of our loans. So that's
Okay.
another kind of if we're talking A to
Yeah, you're
Z,
direct.
the Z part of it, right? Where if you're
Yeah.
building a rental portfolio and your servicing is constantly being transferred to random servicers, it can be a bit of a headache to
Mhm.
track, deal with issues. Every platform's different. So if you're getting payoff statements or 1098s at the end of the year, we
Mhm.
really centralize that and do that in house. So say something goes sideways with a borrower's escrow, they could
Mhm.
text their loan officer, shoot an email over to somebody on the team and say, hey, this doesn't look right. And they'll say, oh, well, I'm going to throw you on an email with, so and so over in servicing that can handle that for you.
Mhm.
Versus, I don't know, you got to go log into that platform. Don't can't see anything on that loan anymore.
Yeah. Oh, I honestly, it's such a, I hate it when I get those for our primary residents when there's, hasn't happened yet, fingers crossed, for the home we're in now. But when I get, hey, this is a notification that your loan has been transferred to, right, and they will now be servicing it. Like, oh man, okay. It's It does. I think it does a lot, right? For people who, and investors might be better with this because they're handling properties and they're turning them a bit quicker, but it's just a headache you don't want to deal with. You
Right.
picked who you picked to work with, right? And you just want to keep that relationship going.
Yeah.
Um,
And that's
but
like
I think that's huge.
that's kind of the through line of everything. So I talked about the servicing, talked about the front
Hmm.
end loan officers and their team. And then in the middle of that, there's the valuation piece. So we're using a panel of investor friendly appraisers that kind of understand what we're
Mm,
doing here, what we're looking for versus going with a third party AMC that's working
sure.
appraisers that do a lot of consumer loans. They might not understand how to look
Different.
through scopes and kind of finished product valuations. And then our
Yeah.
asset managers are internally as well. So we try to just
Okay.
touch every piece of it.
I think that's great. Do you have any perspective into when the company, started to scale, like what role systems and processes kind of played in that? And I don't know how long you've been with Renovo, but we're always curious. Like at Pete, we talk about systems quite a lot and just the importance that they play in any business being able to hit that next level, right? Optimize and become hyper efficient. So are there, certain systems that have really like played a valuable role for you guys as you've grown and kind of accelerated?
Yeah, I would say the CRM plays a huge role in that, right?
Mm.
So
Yeah.
we use kind of the Salesforce where we
Mhm.
built that ourselves, and then everything goes into that, whether it's prospecting, active deals,
Mhm.
customer accounts,
Yep.
so we can kind of see and manage everything in there, communications, tasks. That's a really valuable tool. So that's certainly a big piece of it. And then some of the other ancillary stuff, I'm not on the operations side, so don't know exactly what all
Yeah.
they do, but I know being able to see everything comprehensively in our
Mhm.
dashboards and looking at
Yeah.
production, whether it's company wide or lender specific, being able to go in there and really manage
Mhm.
that all has been, invaluable in the growth. I don't think you can grow successfully without a good CRM at any kind of scale.
Yeah, we agree. I mean, yeah, there's just too much. There's too much to manage. You need a system to manage it. So what were you up to before you got to Renovo? Tell us a little bit about kind of your personal journey.
Sure. So I've done a number of things in the space,
Hmm.
got into it in about 2009, working at an appraisal management company out of San Diego. So that was an
Okay.
interesting time post recession. The home valuation code of conduct had gone into place, which was a piece of legislation or sort of lending rules that said the origination staff needs to be separate from the valuation team. Before
Right.
that, I had loan officers calling the appraiser, "Hey, I've got a contract at 123
Hmm.
Main Street for $200,000. Can you go
Yeah.
ahead and do the appraisal?" Wink.
Hmm.
That
Hmm. Hmm.
pre-recession run up, there was so much of that.
Yeah.
Uh,
Yeah.
so that sort of bifurcated production from operations and valuations. So it was
Did,
an
did that
interesting.
come into play in '09, Brandon? Was that
It was
or
May of '09
before? Okay. Okay. Yeah. Very good.
at Poop came.
Hmm.
So did that for a few years, then worked on the alternative valuation side, some more hybrid appraisal, broker price opinions, which led me
Hmm.
into capital markets because outside of origination, there's multiple valuation types. So that was more for folks that were trading mortgages, buying bulk tapes of mortgages, where you're not going to go get a full appraisal on 1,000 loans that you're just bidding, and you know if you're going to win.
Okay.
So
Yeah.
they sample those out and use broker price opinions where a real estate agent drives by, takes some pictures, and does it. Uh,
Hmm.
then one of my clients that we were doing the valuation work for asked me to move to Chicago and run the acquisitions for the NPL fund. So did that for a bit. We were buying mortgage debt. Fast forward to most recently before Renovo, I was with an AI company called
Okay.
Analytics that was right before I left there was purchased by Moody's. But
Hmm.
that company took aerial imagery of real estate from airplanes that were flying over all the
Hmm.
major MSAs and we would use computer vision and machine learning to extract data out of it. So if
Okay.
you were either an insurance company, was the genesis of that company, but I was on the
Mm,
real estate side helping run that strategy. So we dealt with a lot of the big nationwide lenders that were doing HELOCs or home equity loans, excuse me,
mm,
where they're not going to send somebody out because the loan value is smaller and a
got it. Yeah.
$600-700 appraisal becomes meaningful. So utilizing that technology to remove the need to go to the property and having
Hmm.
confidence in the condition of that collateral was the goal. So we could go to the
Yeah.
general lender and say, you're using automated valuations anyway. So the valuation piece, check. Well, you also don't need to
Hmm.
send anybody to go take just a photo and basically make sure the house is standing. We can provide better insights from these fly
Yeah.
and give you data with it as well.
That's that's very interesting. Um, I guess like what are some of I have so many questions. um, well, one, do you miss it? Uh, and and two, I guess more importantly, you know, what were some insights that you got from working with that company in terms of, I guess, like the potential of what this tech, whether it's AI, generative AI, predictive AI, what it can do. And I wonder if you've like thought about any of that in the Renovo space and the lending space as well.
Yeah,
So
well,
it's kind
it
of
was
broad, but
no, it was a really cool group to be part of, right? It was your
mhm.
Palo Alto VC backed tech startup vibe. So,
Uh-huh.
a lot of
That's a
very
vibe.
people. It is, yeah.
Yep.
Lot of very smart people, a lot of, great innovative things going on over there. So I
Oh.
certainly learned a lot. I would say one of the big takeaways from that was understanding the different applications of AI, and it's
Hmm.
evolved so fast. So, 3 years ago, talking about AI it was kind of broad, right? Like people were just like, I don't quite understand it. Like I know what I've heard of
Hmm.
Chat GPT, and so that was really LLMs everyone thought of, the large
Hmm.
language models when they thought of AI, and then thought of it as like a customer service bot type of thing, or a
Yeah.
call center where it's a AI driven
Sure. Yeah.
customer service rep. So I
Hmm.
think people sort of thought of it as like human replacement of answering questions and this
Yep.
search engine type of technology. But the other legs in that AI stool are the computer vision and the machine learning, which
Hmm.
a lot of people used, but maybe didn't realize it. Like if you've used Google Lens, that's been around for a number of years where you take a picture of something and it tells you it's a cat because
Uh-huh.
these neural networks that have trained the model over time to understand, all right, with 99.9% certainty that's a cat, that's the winning
Yep.
label, so I'm going to show that it's a
I'm
cat.
gonna go for that. Yeah. Yeah.
And that's kind of the technology that was used there. So I think understanding that AI doesn't have to be an overhaul of your entire technology and way of doing things. You
Hmm.
can find these sort of lightweight data layers that add efficiencies to your process without it being this intimidating thing.
I love the way you just phrased that. Lightweight efficiency layers, right? Like the that essentially provide like a lift, right? To whatever it is you're trying to accomplish. Do you see, I mean, like over at Pete, that's, hey, we're a CRM, we're an all-in-one kind of, software tool for investors. So we're incorporating AI in a few different ways. Um, and I'm curious, like from the lending perspective, how do you see AI changing the space up, or what are some of the things you're thinking about, in this? Because you have a unique perspective, having worked at that company. So, I- where do you see some changes, that could add value? And on the flip side, are there any areas where you would almost advise some caution for
Yeah, I
people in
think
this space?
one of the interesting spots in lending is fraud, right? So if you're thinking about it
Hmm.
in terms of like fake bank statements, for instance, if you're able to take some of these OCR technologies that can
Sure.
post out a bank statement and say,
Hmm.
like, that looks a little funny, or the month over month isn't adding up right, you can detect a lot
Hmm.
of that stuff that a human may just miss, right? And,
Yeah.
stuff like that, the fraud detection piece is interesting. I think there is a lot of space for lenders on the valuation side to use
Okay.
things like what we were offering at my previous company. So kind of property condition stuff.
Yeah.
And use either Google Images, overhead images, or just if you're looking at grading the interior of a house, right? You could take pictures from a realtor and it could tell you this is granite, stone, quartz, that's a wolf range, it's this type of cabinetry,
Use that.
it's old. So you could really get, a lot of those grading and ratings and yes and no things answered just through the
Hmm.
photographs that people provide. And it's going to create a ton of efficiencies in the lending process and speed things up, make it
Sure.
cleaner. And then ultimately, when you look at lending, the secondary market is so important where those loans go. So it'll
Hmm.
give more confidence to the underlying collateral that's going into a mortgage bond, which will make it easier for rating agencies, which can also use that technology to do quality control checks before they put the stuff in bonds and ultimately package it up for investors.
Yeah.
Uh, yeah, it's an exciting time, especially in the private lending space for that, because we are
Mhm.
outside of some of the banking guidelines. Where if
Mhm.
you're a depository institution, there's just different guidelines and rules. You're dealing with consumers, whereas all of our loans go under the business purpose lending classification. So
Okay.
we lend to LLCs, corporations. It's got to be a business entity. So it's just a
I see. Okay.
little bit
Yeah.
there. Yeah.
Yeah. Yeah. Yeah. It's certainly an interesting time. I like that you described the fraud protection as interesting. I mean, I think some of us would say like terrifying. Right. But it's fascinating because there's quite a bit that can be created. And then, like you said, there have to be some checks in place to understand and figure out what is kind of what is the not the original version, right, or the authentic version. So um you're just bringing me back to, I was reading a Pokemon alphabet book to my daughter last night, and there's a Pokemon that can change shapes into anything. So they were like, which one is the real Pikachu? I was like, this is actually training you for future things. You have no idea, but we're preparing you.
Well,
uh,
yeah, that's funny. I'm deep into Pokemon stuff as well with my 6-year-old, so I
mhm.
get it.
Yeah, well, you probably know which Pokemon it is. I'm trying to remember the name. I want to say like Ditto, or I can't remember. There's one. It's a blue blob normally, but hey.
Another,
So,
I think you kind of touched on it with the AI is you really want to use it for the mundane vanilla stuff that doesn't need the human touch, right? So
mhm,
a lot of
mhm,
AI think of job replacement and automated decisions, and a lot of that exists, right? But the way we looked at it previously was, for instance, you could see roof condition, which is the lifeblood of the house. That is graded on a scale through that technology. And if it hit a certain mark, fine, it's good to go. Just go
mhm.
fund the loan. If it has, severe condition rating, then you get a
Mhm.
human involved, right? Then you maybe send somebody out to do a drive-by on the property or an appraisal.
Sure.
So same with the fraud detection stuff, right? Some of it is
Mhm.
just good to go, looks good. Some of it looks a little questionable. Then you get an expert to go look at it, understand it, and look into it. So it's not
Yeah.
like it's fully making all of the decisions. It should be making the easy decisions, doing the easy tasks, at least as it
Mhm.
sits today, right? We make it to a point where it does do all that really well. Uh,
Yeah.
Humans are still, needed when things are raised to a level of concern.
Yeah. And I think there is this balance that many walk of wanting to be needed, right? Because it's scary to think about fully being replaced in some capacity, right? Whether it's in a professional way setting or not. And also, humans are inherently, we can sometimes be lazy. So there is this, I don't say it in a bad way, there's this desire for increased efficiency and, really the potential that AI brings to like all of our lives, our professional work settings, our personal lives. So it's kind of it's kind of neat to walk the tightrope right now,
Yeah.
and and see where things land.
I mean, I think one of the things you and I talked a lot about a little bit
Mhm.
is how, you guys are experimenting with AI at Pete and kind of how that's all playing out. And eventually, probably sooner than we think, getting to a point where there's a lot of automation in there for
Mhm.
these AI listening tools to be able to plug into CRMs and set tasks.
100%.
You know,
Yeah.
the human's still there doing it all and operating, and if that doesn't go
Mhm.
away, it's just they're much more productive and organized.
Yeah, exactly. You're way more efficient. You're getting results, tasks, reports, data just quicker, essentially. And sometimes, the hope is you're getting it that data handed to you with more accuracy, because with more of the human touch, there is the propensity for human error, right? And so I think management versus mundane tasks is where hopefully keep your human capacity reserved for, and then um, the rest just let the machines do it. So,
Yeah.
you know,
Yeah, it's like there's something to be said for both. We
yeah.
talked about our local approach, so
Hmm.
that is really valuable to have boots on the ground for that, to go out and see projects, shake hands, and then also there could be an appraisal that's, flagged as rural, but that local person understands, this isn't really rural. They know the area, they can help
Yeah.
fit things in a unique box that's not necessarily the hard credit box. So kind of
Hmm.
being able to understand where exceptions are reasonable versus not is the
Yeah.
human task.
Well, and in the era of tech and how rapidly it's evolving, I think a company such as yours, such as how Renovo offers that emphasis on really building those relationships, not only with your clients, but also passing on these local, like these hyper local and kind of community based relationships, whether it's with, like you said, lawyers, attorneys, inspectors, advisors, whoever it might be. That kind of becomes this beautiful vintage, like human like care touch point um that I think you have a lot of companies kind of rushing into, and they need to, right, rushing into like, well, what can we do with AI, what can we, because if we don't do something, we'll be left behind. However, you guys are positioned in a really beautiful way where you can take on tech to increase, the work that you're doing. But you've built a foundation that can't really be replaced, right? Like the beauty of some of these relationships are that they have to be between humans.
Right.
So, yeah, and
You have, tracks for technology. So we get something called the Renovault that borrowers can go operate in and upload
mhm.
documents and see what's going on. So it's sort of, choose your adventure, right? So it's how do
Yeah.
you run your business and what fits best, but we are going to get to know you and, you know,
Yeah. Yeah.
super helpful.
Hopefully you don't mind having a conversation. So, because if
Exactly.
you do, you guys are probably not the lender for that person. But
That's right.
um, yeah, yeah, and it's okay to say that, but it's exciting to see what you guys have built, and we're looking forward to, to all that is to come. I think based on, again, like I said, when competitors and others in the, same space have nothing but good things to say, it's a really wonderful thing. I think you guys should certainly be proud of the reputation you're building, and we appreciate you coming on this podcast, Brandon. And also, I'm just going to say it one more time. If you are looking to finance your next deal and you want to do it with a lender that's more than a lender, someone who cares about you and actually is invested in your success, all the way down to a local and community level, then you have to talk to Renovo. Renovo Financial, they're for you. So as soon as you stop listening to this podcast, you know who you need to reach out to. But thank you so much, Brandon. We appreciate you having on this.
Yeah. Thank you. It's nice chatting with you.
All right. Cheers.
Cheers.